Thanks for tuning in for Idea Hub. Over the next 15 minutes and so, we will speak to Mr. Iftikhar Ahmed, Managing Director of Softlogic Life Insurance PLC, to discuss the investment thesis of Softlogic Life Insurance PLC. Thanks for being here, Mr. Iftikhar.
Thank you very much for having me.
Pleasure having you. To start off with, when we look at the life insurance segment in Sri Lanka, the current market size is closer to 100 billion. Out of that 100 billion, Softlogic Life has closer to 16 billion market share. When we compare this performance with 2011 market share of 1.6 billion, we are looking at a 10 times growth over the past 10 years. What did you do to achieve this growth?
Right, so I think the Softlogic Life journey has been a very interesting one. I think it's almost a case study in how to grow an insurance business. So I think the turning point for this company was when Softlogic Group invested into a company which at that time was known as Asian Alliance Insurance. So Asian Alliance Insurance was a composite company. It had both life and general. At one point, then the regulator mandated for a split into life and general. When we looked at the business in terms of the future, we felt that general insurance would be very competitive. As a result of that, we divested our general insurance business to Fairfax. That's what the company is now called. And we continued with the life insurance business. And we felt that the market had immense potential, primarily coming on the back of the fact that the market is underpenetrated. Sri Lanka's life insurance penetration, as you know, is about 0.5%, and therein we saw the opportunity. And from that point onwards, it was a question of getting the correct resources on board, getting the correct people. The team, I think, is the most important success factor in Softlogic Life's journey. So it was getting the correct people, the correct resources on board. Of course, at the time we did the acquisition, Asian Alliance at that time had a very good agency team, right? That team was, I think, one of the best in the market, but it was relatively a smaller team. So what we did was we built on those good principles and expanded the agency footprint substantially, number one. Number two is in financial services and also insurance, it's all about scale, right? And I think scale is basically what gives you success in financial services. So we had to broad-based distribution, and we created, I think about 3.5-4 years ago now, what we term alternate channels, where as different to agency, in agency there is an advisor that goes and meets a customer to canvass insurance and essentially books an insurance contract. We created separately alternate channels which focused on the banks and on corporates. And I'm very, very proud to say that within, I think, 3 years or 3.5 years, that team has got to the position of market leadership in the single premium and group premium business. So that has given our agency team and our overall growth a substantial boost. We haven't stopped there. We are a very innovative, a very technologically driven kind of mindset is what we have, and we've looked at also the micro mobile segment, and we were the first life insurer to tie up with Dialog, which is the country's leading telco provider. So our life insurance solution is the only one that is there on that. Any individual can buy a life insurance policy 24/7. If you're a Dialog subscriber, you simply dial #107# and you can purchase a policy of up to 1 million rupees, pay 300 rupees a month, which goes off your Dialog bill. So if we look at then how we have expanded the customer base. So our agency team now has about 100,000 customers. If you look at our alternate channels, they have about 400,000 customers, and if you take Dialog, then we are about 300,000 customers. So we are at that 1 million customer threshold, and if we take then the spouses and the families that are also involved, that are also insured, our lives insured in Sri Lanka is about 1.5 million, which is a fantastic position to be in. And mind you, this is yet in a market that is underpenetrated. So when the market starts to move forward, we think Softlogic Life is ideally positioned to make the most of the market growth.
Interesting growth story. Now, you have achieved this 1 million customer base while maintaining 20% ROE over the past couple of years. So, how did you achieve these results?
Right. So when it comes to the insurance business, there are essentially kind of 2 to 3 areas where the insurance products are actually positioned. So one is protection, meaning that you're protecting against the risk of death or health. The second one is first one is health. Second one is the risk of death. Third one is a kind of investment product. So these are the 3 broad categories that are there in the insurance space. So now obviously when it comes to the investment product, those products, although it gives you a good top line, the spread or the margin on those products, it tends to be very small, right? So we have focused as a company on the products that have the best margin. So we are a true insurance provider in that we are always looking to give our customers protection, right? Protection against health, protection against critical illness, protection if I am not there, that my family has something that they can depend on, the risk of death. So as a result of that, those margins tend to be relatively stronger. And that is why if you look at our P&L, our margins coming down to the bottom line from ROE perspective have been maintained, and that is something that we also want to maintain going forward, because there is no point just chasing top line for the sake of top line. And I think maybe later on we can discuss IFRS 17. So especially with IFRS 17 coming, you will really see the true profitability of respective insurance products.
You have mentioned the current market penetration of the life insurance remains at 0.5% of GDP.
Correct.
This is significantly lower compared to the Thailand penetration of 3%. Do you see our market expanding by 6 times from here, and what should be done to achieve this growth?
Right. So you're absolutely right. At the end of the day, insurance penetration, we believe, has a very close relationship to the per capita of a country, and Sri Lanka is just below $4,000. Unfortunately, over the last couple of years, we've really not been able to get that growth going. First, we had in 2019 the Easter attack. 2020 came COVID, continuing into 2021. So we've had issues in terms of getting the per capita of the country up. Having said that, COVID, we are starting to see the beginning of the end, hopefully, right? And if that is the case, as in most cases where there is a kind of a global pandemic, there is always a recovery and a strong rebound after that. So we are hoping that Sri Lanka will catch that growth wave and be able to develop faster on the back of it, and hopefully catch up on something that it actually lost in these COVID years. So if we see the Sri Lankan economy going towards maybe $7,000 per capita, there is absolutely no reason why insurance penetration then shouldn't go to 3%, right? Which means that there is a 6 times growth factor available for the Sri Lankan insurance industry, and we believe in that. We believe in that very positively. So it's a matter of the different aspects of the economy of the country actually kicking through for us to get that per capita growth. But I think the other interesting thing is that if you look at, let's take Softlogic Life, in 2019, right, despite an Easter attack, despite the country having a negative growth, our company grew 25%, right? In 2020, despite COVID, once again we grew 25%, right? Industry grew 16% last year, which is also very, very positive. So I think you will tend to see that with the country progressing, because what also COVID has done is that COVID has really raised the awareness for protection. Right now, if earlier people wanted to sell life insurance, they had to resort to all kinds of advertising. A lot of companies went around with negative advertising, meaning they are trying to scare you to actually buy a product. But now COVID is in your face, right? You every day, right? You see it, you feel it, and people are very apprehensive about this. And so that's why there is health insurance and life insurance, and there isn't a better time than to be able to now buy your health insurance and life insurance. So that factor is definitely now that has given the industry, and that has given the life industry especially momentum, right? And so we see that momentum actually playing through, and as a result of that, we will see a good prospects for life insurance in the next 2 to 3 to 4 years, because even when COVID is done and dusted, you never know what the next pandemic or the next issue that is going to come around. So I think for some time, especially the next 3 to 4 years, we'll see a good run, a good growth in terms of life insurance and health insurance.
Let's shift our focus towards the ownership structure of the company. Now, if we look at the ownership structure, we can clearly see Leapfrog, a leading private equity arm, owns 38% of the company. And they have significant exposure to the healthcare and financial services in emerging markets and African region. So what is the rationale for them to invest 38% of the ownership?
Right. So Leapfrog is an impact investor. They are not merely a financial investor. They actually want to have a kind of a triple bottom line focus. And when Leapfrog actually entered Sri Lanka, they kind of went through the life insurance industry and the players in the industry in a fair amount of detail. So before they invested with our company, they must have had due diligence and various other kind of measures that they do before they invest. For up to maybe about 18 months, 12 to 18 months. And I think when they finally evaluated, they felt that Softlogic Life was the company that had the best momentum going forward. So as you also probably will know, they bought the stakes of DEG and FMO. So DEG is German Development Financial, German DFI, owned by the KfW Group, which is German government, and FMO, which was also Dutch DFI, owned by the Dutch government. So Leapfrog bought these two stakes. They are very happy with the progress that Softlogic Life has achieved. They see us as one of the prime portfolio companies where we have managed in every area that we have set out to do very well, right? Whether we talk distribution, whether we talk finance, whether we talk HR, whether we talk marketing, in each of those areas, the company has done brilliantly well, right? So performance, of course, but if I just touch very quickly on a few other areas, if you take the finance area, if you look at our annual report, it has won gold locally, it has been recognized in South Asia. In HR, we are a great place to work for the last 5 years, and now recognized within the great places to work in Asia. If you take marketing, in 3 years, we were brand of the year, Softlogic Life, right? Mainly because we changed the perception of life insurance in terms of the public. So those are phenomenal achievements, and for that, I think Leapfrog is very happy with the partnership that we have. We are also very happy to have them on board. They are in terms of their growth and their stature. I think about 3 or 4 months ago, Singapore's sovereign Temasek, I think, also gave them another $500 million. Obviously, so Leapfrog is seen as a vehicle, as a counterpart who's also fostering growth and development in the correct manner, in the correct way. So we will continue to look for other opportunities also with Leapfrog. We are discussing certain other transactions as well, and we see them as a great partner and a great strength to Softlogic Life.
Okay. Last year, one of the common theme we have observed in the local stock market was foreign investors made a hard exit. But that wasn't the case with Softlogic Life. Last year, you have secured 30 million worth of foreign funding from Norwegian and Finland fund. So what made them to invest in Softlogic Life?
Right. So actually, we did two transactions last year. $15 million was a financial reinsurance transaction with Munich Re. Munich Re is one of the top 3 global reinsurance companies. So that transaction closed, I think, somewhere in March of 2021, $15 million. The financial reinsurance transaction that we did was, I believe, the first such transaction in South Asia, right? I don't think anyone else has actually done a transaction like that. Now, why it was possible is because we have a protection book. We have contracts that are going, that are profitable, that are going from 7 to 10 to 15 to 20 years, right? So it is almost like a securitization where we get upfront the profitability of that portfolio. That's the financial reinsurance transaction. The second transaction that we did was $15 million transaction with Norfund and FinFund. This transaction was concluded amidst the pandemic. So we are very grateful that Norfund and FinFund saw the prospects that Softlogic Life had. They saw the prospects that the life insurance industry in Sri Lanka had, and the prospects that the country has. And I think whilst we will know that from time to time there will be interruptions like COVID to the business, but now COVID also is potentially something that is positive for life and health insurance. And as a result of that, they saw the potential, they saw the prospects, they saw the value that is being created, and as a result of that, we were able to attract $30 million in a pandemic year, which I think is a phenomenal achievement for Softlogic Life.
Okay, my last question is about the IFRS 17 implementation. Do you see it as a threat or an opportunity for the industry and the company as well?
Right. So IFRS 17 is going to be an event that will change the face of the insurance industry. Why? Because the way we calculate the way we account for our business is going to be dramatically different, right? So what IFRS 17 will do is it will kind of pinpoint the areas of insurance product profitability. And so we at Softlogic Life, we see this as an opportunity because we think in the product space we are very well structured. We can do further improvements, and we will look at those progressively. So what will happen with the implementation of IFRS 17 is that the accurate or the true profitability margins of different insurance products will become very transparent and can be then compared across the industry, can be compared across countries. And I think what it will do is it will also, from an investor point of view, really highlight the valuable opportunities or the valuable investments that are there in particular markets or particular countries, right? So from a Softlogic Life perspective, we are very keen to see the implementation of IFRS 17. We have started out on our roadmap and we have made good progress. Having said that, from the industry perspective, pursuant to everything that has happened with the COVID and the disruptions that COVID has caused, it is likely that the industry will seek a postponement of the implementation of IFRS 17. So that discussion, I think, currently has now started, and we will need to see what the outcome is. Based on what that outcome is, we will then need to take the next steps. But from a Softlogic Life point of view, we've always wanted to be ready for 2023, right? And in terms of preparedness, we have gone through the different consultants, we have gone through the different phases of the project, and we are ready. So we see it as a positive. We see it as a positive because it will clearly highlight the investment opportunity that is available with a particular company. And in that space, we think our business and our business model will come out quite well.
It's been a pleasure talking to you. Thank you so much for your time. And audience, we are signing off.
Thank you very much. It has been great speaking and having this chat with Softlogic Stockbrokers. Thank you.
Pleasure having you.